Yo, yo, yo. All right, let's get to work. Hey, we got a gap up in the market here. We're on like, day 8 or 9 of a move here. We're getting real long in the tooth, but problem is we're overbought, but we're not necessarily parabolic yet. We're just kind of riding up the upper Bollinger Band. This makes it a little bit tricky because as we get more and more extended, the shakeouts in the market in terms of like, hey, something will look good, and then just pull the rug gets a higher and higher probability. The more days you're up in the market and the more extended you get, the more shake and bakes or shakeouts you'll get on like hot setups, because the itchy trigger finger is always there on all names, right? Because everything gets so extended. Now we have a couple things that's happening in the market in that there's been a big rotation. This has been a year of rotations, meaning, in the beginning of the year, it was small cap city, right? It was like EV companies, battery companies. Then it went from and SPACs, and then all of those faded and everybody piled into like your grandpa names, your Johnson & Johnson, Procter & Gamble's, your commodity names, like things that we haven't looked at in years. And then now all of a sudden, right in the last month, people have piled back into large cap tech. And so we're getting this just big rampage, but the money and the action has been centered in really just a handful of names. And so, when you see the market flying around like this, it's really coming on the backs of, Amazon, like this, this thing made a 200, 300 point move the last few days. That's pretty big for like a $2 trillion company. You can see here, you got flat top breakout. And by the way, like this base is so long, the longer the base, the higher the next move is, right? So the longer the pattern, the longer the actual follow through is. So if you see a tap back in this to like say 3,500, some type of retest or what we call a throwback, you probably want to put some of this like in your IRA or something like that, because when you have a base that's this long, usually the secondary move that follows it will be as long, if not longer sometimes. So that'll be just something to be mindful of. Now, we can't chase this stuff up, right? So if you see like Amazon, if you see the Apples and the Googles and the book faces and, all that kind of stuff, these things are real long in the tooth. So I think at some point today, just like yesterday, you're going to have this happen until you get a meaningful couple day pullback. You're going to have this kind of action happen quite a bit, which is like you're going to have like what looks like just like a hot morning starting up, and then you'll start to see a little bit of weakness, and then you end up with like kind of like a 20-minute just rip roaring nice pullback, and where like everything gets shaken out, like all the hot setups get shaken out, like there was. So you'll see a lot of that, like we were playing this docu, right, which is an awesome setup, but this is what will happen in an overextended market. Like you see this 277 goes to 293, so uses up its ATR, its average to range, and then you get this like where you can't even try to bounce it. The bounce is there's so much selling going on in the bounce, right? Like it doesn't even hold at like the levels that they should be holding at. That's how, because everything is so extended. So that's where we'll have to be kind of like really careful today. The IWM has been showing a lot of weakness too. So there's been a sell-off in small caps, which you guys have probably seen. The meme stocks, those are all mostly shorts for the most part on pops, at least for quite some time. But the memes are, probably done for. You may get kind of a dead cat bounce in them, but this like AMC, this is into the trend line probably in the EMAs. This is a short on pops. Like this really trapped probably all sorts of people over here. The volume's just dried up on it too. That's when it's going to bleed out, is like when there's just no, like if you can see here how much volume is just drying up on these things. See this? Like, right? It's just declining. So that's usually a telltale sign of a bleed out coming. And you see this like this Wish, right? Like a lot of these are just selling off. Clover, like look at this thing, right? So these are all just pump and dumps. They're donezo. So all pops. You want to be just dicker and dealing on these things, fading them off. Meaningful pops, so not if they pop up like 50 cents, right? But like anything meaningful, you want to be taking these things down. They're all turds anyways. Like who gives a shit, right? Tickers are tickers. I think where sometimes people make mistakes is like they get really invested in these things. They like they're fucking people, right? There's like, oh, I love this stock. It's like, no, you don't. It doesn't mean anything. We have two plans today. Number one, we want to try to fade this gap at some point. It may happen right off. It may rug pull at the open, or it may be more like yesterday where, it pops up and then we got to fade it off. But like at this point, every single day till we get a couple day pullback, any big strength or any big gap, we want to be fading. We want to be fading them off. So that's going to be something that's where it's at. I think the speculative stocks we probably need to stay away from. You're starting to see a lot of trapping, a lot of fake breakouts. You just don't even really need to be a part of it. There's more than enough stuff to play around. Let's take a look here. So we got some gappers over here. Data storage, the Data Storage Corporation. Like fucking pass. I think we stay away from these kind of names just because they're not going to be easy. This is like, the traps are in on these things. And what's happening is the pumps aren't working as good. So what you're seeing is like, these pumps, right? Like see this thing in the morning, like the pumps, they're not sustaining anymore. So, you want to stay away from those kind of names. Like this is going to get you in a lot of trouble. The action has really been in, a different kind of name. So you want to be thinking, large cap techs. There's like a nice run in solars going. And then you want to think about these kind of names like that haven't gone yet. Like this Big C, this is a beautiful chart here. Like this is probably for us top of the list today. You have, right, as an e-commerce tech company, it's in the sweet spot of market cap. You're that like $10 billion companies are the sweet spot of market cap. But you can see here your breakout pattern, a nice rip over the 200 SMA. Now you can't chase a 6% gap up on this thing because it's going to have a spread on it. So you're going to have to, let this thing pull back. But like that's fucking hot. Like that's, that's where you want to be on this. You want to think, okay, what are the tech stocks that haven't gone yet, right? That are coming out of bases or that have pulled back to big support. And then you want to fade the really extended ones. And I think you want to stay away from like this kind of speculative stuff, your EXPR types, because that's just going to be, they'll start bouncing out of nowhere, but like there's no point of staring at them when there's other names. So I would go with Big C. This S is like this Centennial one. This is an IPO. This is a large cap company at this point. This IPO, I think that these ransomware plays are going to be in flavor for the next couple weeks. So like the Centennial one, this is a cybersecurity stock. I think that Crowd is still like Crowd is a daily trader for us at this point. Fucker gapped, huh? This is like coming out nice flag pattern here. This is another cybersecurity stock, right? This is like in your sweet spot too. Like these aren't mega cap techs. It's a $50 billion company. So it's not some turd, but it's not a mega cap tech that like is just going on a slow rampage. These are going to be, the tour de jour. Now the rest of like the cyber plays, they move so slow. Like cyber itself is like really shitty. PanW stinks. There's a whole host of, cybersecurity plays. Like this PanW also moves really well, but it's just got a spread on it. And I was watching this yesterday. It's actually got a much lower market cap than Crowd, but you got a breakout on this too. So like you can put something like that on your watch list it does have a little bit of a spread on it, so you would have to like trade around there. I just statistically do not trade $400 stocks very well. I never win on Tesla. I think Tesla ruined it for me. I never went on fucking Tesla. Now crowd's $200, but somehow I play that well. It seems like 400 is like the sweet spot in my stats where I just don't trade it well. Roku always goose me up, but like this is a nice thing. You got probably an imminent breakout on this one. You know, this FEYE has been basing out forever. Now this one moves a little bit weirder, but like you can see here, like it's got just barely enough range yesterday to put it on your radar. But I wouldn't be surprised to see this thing because it doesn't do crazy amounts of volume. You know, if the cyber security plays start to go really wild, somebody will come in hot on this thing, you know, because it's in that sweet spot of like market cap. It's in that sweet spot of market cap and liquidity where, you know, it can get moving very, very fast. So like this is not because the chart sucks. This is not a priority, but I would not be surprised like to see this thing because just looking at the volume, if you look at the volume of the plays that like start to get picked up out of nowhere and go bonkers, there's usually a couple things that happen. Number one, there's a theme, right? There's like a theme of something, right? So it's like memes or this or that or whatever it might be. There's some kind of theme. And then it's usually like one of these kind of mid-cappy kind of companies that's been left for dead that gets picked up, you know? So like I got this on the back of my mind. I don't think it's a priority today, but like if we start to see some flow coming into this thing, I think we got to come in hot because this fits the sweet spot of like what actually ends up getting real loose sometimes. It could be any day, you know, it could be any day. Like who wants to buy crowd at $60 billion when they can just come in on the fucking fire eye, right? And get this thing going. So to keep it on the back of your list, I think it is going to look pretty good. I didn't really see very many good gappers today. We're like in the teeth of like we're in the teeth of right before earnings season. So if you think about like when the real action starts, guys, you want to sharpen your swords today for the next week or two because, you know, Alcoa kicks off earnings. That's at 7:15. We got 8 days. So, you know, if you haven't been trading well, you better figure out how to start trading well because earnings season is where we make our butter. Now we've been making a lot of butter anyways, but this is where when starting on the 15th, that's when you really start to have some fun. So let's get into like just top plays. We'll go from there. I think this Solars have been holding up really well. Now this JKS of Chinese stock was getting dusted yesterday. This one bit the bullet and moved against its brethren. So I like the overall look of this. It's got a lot of potential. The other thing is in terms of sector themes, this bad boy held up really well yesterday, but Solars are also going to be doing pretty well. So I like this one. I think this is my fave for today. The other Solars are starting to flag out. Run is got a nice setup on it, probably up to 200-day moving average in the next couple of days. I think SPWR looks a little bit more clean. You had that breakout, pull back into the 9. You had some good range yesterday, $2, back down $2, up $1. That kind of range back and forth, we can definitely play around with. So I do like that one also. So we've got cybersecurity plays. We've got solar. And then we have like these techs that are either coming out of a pattern or have pulled back in a nice manner. So like I think the Peloton is another one. Like you can see, this is a beauty. You've got a nice trend over here. Pull back into that 200-day moving average. You remounted and kind of broke your trend line over here. The trend lines are bullshit anyway, so you guys should know that by now. But it's just good for a frame of reference. But if you can't make trading decisions, by the way, off trend lines. Like that's actually just an urban legend. Urban legend to sell trading books. But like you have a nice little doohickey over here. Pull back to moving average. Man, I think this thing can pick up some steam. If tech can hold up, then this is where we want to go. So Big C, Peloton. We've got these solars, SPWR, Run, JKS. Good. And then at some point, we expect the rug pull on the Qs, and we'll probably take down, we can take down, Apple. We can take down Apple. There's going to be some other, Amazon's probably way too expensive to be really playing. We can take down Apple, and then, you have a whole host of other extended techs that are like kind of at resistance, like Docu. Like I actually like this chart a lot, but like, you're right at kind of resistance points over here. If the market rolls over, this thing can roll over, and we play this both ways in this particular one, but this is something that can roll over 10 points, 15 points in a day. That's where we want to go. On the speculative side, I believe, when is Richard Branson going up into space? In space, the final frontier, right? As that comes into fruition, we want to be thinking some space plays. You have Spaceballs itself, but I think this one's probably done. But you have ASTS, it's been kind of flagging out. You have ASTR. Now, these weren't doing anything yesterday. So, take it with a grain of salt right now. But if we start to see a bid pop up on these things, we'll take these things down. Good. Peloton, probably on the tech, Peloton, even TTD, those are the faves. We got the cyber plays. Then we've got solars. Good. All right, I think that's the list. I'm sticking to it. I stay away from all speculative fever and small caps for the time being. Another tech stock that's actually pulled really back into support is this Etsy. You've had a $20 retracement so far. Right on the 9, you got a 9 EMA hold on this thing. I think something like that's probably going to have some legs too. So if we need to do and get into a tech name, because tech just keeps going on a rampage, this one's at a $20 pullback. We can keep rolling on that. A bunch of you guys have asked about this, Newegg. Yeah, like it's got to have a huge spread on it. It's going to have a huge spread on it. This is a tough trader. For those of you guys that, trade for a living, or you have like a good capital base, this type of stock can be really fun. But like, this is the most hair-raising type of stock to play because it's going to have a spread, and it also drops out of nowhere, meaning, you can see from here to here, right? It doesn't do orderly pullbacks. When it pulls back, it does 10%, 15% pullbacks. So what ends up happening is if you chase it at the wrong spot, it can get real nasty. So just kind of be mindful of that. I do think probably this thing is in play, but like this is not a safe play. Like this is going to be one of those plays that this tests the limit of your skills. Because when you have a high spread play with a low float that's getting really moved around, you have to be able to kind of accumulate it on support. But in general, because we're momentum traders and breakout traders, we're always conditioned to kind of, buy high. But it's tough when you have a big spread on it, So like you have to like almost retrain how you think of price movement and support and resistance. And you got to be on these type of plays loading up at supports and kind of selling into the spikes, which is how most people trade opposite, right? They buy the spikes into resistance or what we call a breakout. And then when it comes down, they sell the supports, and that happens sometimes. It happens to me all the fucking time. I don't like to do it like that, but sometimes it just happens. So that's where this type of stock can get you in a little bit of trouble. I think there's more than enough, easy plays out there where we don't have to necessarily get too hot on this, but overall it's got a good look. That's the list I'm sticking to. I think the solars are probably our main focus, then cybersecurity plays. Big C Peloton. And then we load the short in once the Qs. If the Qs go parabolic, we start looking to fade this gap. We're at the top of the Bollinger Band. I want to see a spike through if we can. That'd be ideal. That's the list. I'm sticking to it. Yeah. Good. Let's have some fun today. Word to the wise. What have we noticed lately? Word to the wise. What have we noticed lately? That the market itself has been really dead in the afternoon, right? The market's been really dead in the afternoon. So you guys got to be super mindful. We're getting maybe like 2 hours of trade time, and then, right, it's not really going up much. So that's something we'll also have to just be, we're going to have to just be a little bit kind of mindful of. All right, let's go do what we do. Da-da, da-da.